Hi everyone, this is Hille on the 28th of June 2013. Nice to be talking to you again. I have had a very busy month in the markets. In fact, I just calculated and I've done 87 trades this month alone, which, if you know the way that I trade, is an awful lot. I'm not a day trader. I like to take long-term trends, and that would be my busiest month for some years. And last week was my best week of the year, and last week I was up 5.86%, and in one of those days, one day last week, I was up 3.4%. So best week of the year and one of the best days of the year, if not the best day of the year. I haven't had a look at that. So yeah, I'm still trading well, which I'm very happy about after May, which is the best month I've had since 2008. But again, I made a couple of mistakes last week, and actually last week could have been and should have been a whole lot better, and I'm going to talk you through why that is the case. Okay, the first mistake I made was actually a very foolish timing mistake. And what happened was the Fed had their announcement last Thursday, my time, last Thursday morning, and in my time it was scheduled at 6 a.m. and it was Bernanke speaking, and everyone was waiting for it. It was a big announcement. Everyone knew it was going to be something worth waiting for. And I looked up on my calendar. No, first of all, my broker told me it was 7 a.m. my time, and he's usually on the ball. And so I looked on the on my trading calendar, and it was actually 6 a.m. It showed as 6 a.m. And I thought, well, it was late. I'd been busy. I was tired. I thought, well, 7 a.m. sounds better. It's more likely to be 7 a.m. because my broker's usually right about these things. And of course, it was 6 a.m. and I missed the announcement. So, how did that hurt me? Well, as you can see on this chart here, and this is the 10-year US bond, by the way. Here is the announcement right here. This big down candle, and this is this is an hourly chart. So this is the 6 a.m. candle. And had I been up watching this at 5:45, I would have taken my positions as quickly as I could, probably at the break of there. Maybe I would have got it down in here. As it happened, I woke up an hour later and was at my desk probably by soon after 7. And because the announcement was that the US looks, or basically they're going to stop their quantitative easing in the next few months, and maybe even remove it all by the middle of next year. I mean, you can read up about it. I don't need to go into the news in too much detail, but I knew that that was watershed news, that it was going to massively impact the market, because it was a real surprise. No one was expecting an announcement like that. And my thinking has been all along that part of the reason why equities are so high and interest and bonds have been so high is that interest rates have been so low. Low interest rates means higher bonds. Low interest rates also mean that people look to stocks for yield, and companies obviously can borrow at low levels because the interest rate's low. So high stocks and high bonds has been a result of quantitative easing and low interest rates. Well, as soon as you take away quantitative easing and low interest rates, the opposite is going to happen. And so that surprised the market. So here I am on this candle here thinking, well, I didn't have to think what I should do. I knew immediately what I should do, and that is to go short. So this is the 10-year bond. As I said, I went short this 10-year bond. I also went short Italian bonds, 10-year bonds, and fortunately I was already short French bonds. Let's have a look at those. These are September bonds. Fortunately, I got a recommendation from a friend of mine who's a very sharp trader, and who used to work for a French bank, and he thought shorting French bonds would be trade of the year. And he told me that back here on the 30th of May. So I took my first short French bond position here. I added to it here, and then here is the date of the announcement of the Fed, the time of the Fed announcement on the 20th of June. 24th of June, sorry, 24th of June, that's it there. So they gapped on the open, and I sold some more there, and then I got out of all of my bonds. No, I'm getting confused, excuse me. So I got out here, I took some here. Here is the date of the Fed announcement on the 20th of June, just like I thought. I added there, I'd already added in here, so I already had two positions. I added another one as soon as the announcement came out on this gap. So I took it as soon as these things started trading. And then here's the Monday of this week, so that's Monday the 24th. You already know that Mondays I believe Mondays are usually a very erratic day, and the market can often go and do strange things, and it can go into an extended slide, which is often not followed up. So I thought that would be the case, that we could go into an extended slide on Monday, which wouldn't have any follow through. So I decided to take my profits on the Monday. Now, of course, unfortunately, I didn't get at the low. I got out early evening my time, so around 7 or 8 p.m. So I got one of these two candles. I can't remember which one. Of course, it did then go on, and I call it Manic Monday because there's often outsized crazy moves on Monday. It went all the way down. So yes, I could have held on for the low, but I never do that. If I feel like it's time to get out, I just get out. There's a term in trading, pigs get slaughtered. If you hold on for the last few pips of a move, you can be holding on and then just get taken out, or you miss the opportunity and you're up here and suddenly you've missed the opportunity. So I got out on the way down, expecting this exact same thing to happen, but not being too greedy. I got out of my French bonds, my Italian bonds, and my US bonds pretty much on the same day. Well, no, on the same day, within an hour or so of each other. So here's where I entered the US bonds on that candle there, an hour after the announcement. Foolish me, I left some money on the table. But I love to sell things that are weak, and I love it when there's been a watershed announcement which surprises the market. And of course, there's this lovely follow through, and then I got out. Yeah, I think I got about 7 p.m. So I got out on about that candle again, went down lower, and then has rallied up since. So so that was a good exit. So that's the first place that I made the money last week. The second place I made money was short silver. Again, obviously with the Fed making an announcement that interest rates are likely to go up, then obviously the US dollar is likely to go up. When people think the US dollar is going up, they think that gold and silver, which trade inversely to the US dollar, will go down. So here is the, I don't know why for some reason I have two different charts on my system. This one is 12 hours out. It says 6 p.m. whereas actually it's 6 a.m. So this is 6 a.m. my time. I missed that candle. Remember, I was asleep. Foolishly, I got up and I knew that this was going to have an impact on silver. So I sold here and I traded it down. I can't remember when I got out actually. I think on the same Monday, 24th. So I got out too early. Once again, I'm not trying to be greedy. There we are. So I got out in and around here. Very happy to take just this portion of the trade, and I built up a big position actually. Yeah, I added 4 times during this period, so by the time I got out I had a very nice healthy position, and that was a good trade. Of course, in hindsight I would have been better off to hold and in fact I have taken some more trades in the meantime as this weakness has continued. But obviously I had a very big position in and around here. In hindsight, it would have been better to hold that. I would have been better off, but again, I don't like to get greedy. What I think is, in situations like this, the easy money is made in the first day or two, and then sure, you can try and squeeze out another few dollars, but it generally isn't worthwhile doing that. If you've made easy money and you've made it quickly, and you've seen the move and you've traded the move, then usually it's better just to go, I've made the easy money, I'm happy to get out. And the other place that I made money was short Australian dollar, US dollar. Exactly the same trade. This was you could even say this was a better trade. I see it's coming off now, which is interesting. So this here is again we're back to the right time frame, because this is the right, this chart works, whereas the other one doesn't in terms of time. So this is the 6 a.m. candle. I should have been up. This is a stupid mistake. Had I been up, I probably would have taken it within 2 minutes of the announcement. Certainly would have taken that low there if I hadn't already taken it. So I left quite a bit of money on the table, so I was asleep for all of that candle. I got in here during this candle here at 93.30, and this one was only a day trade, unusual for me, but again I thought I'd made the easy money. I got in at 93.30 on that candle. I got out at 92.19. I took 2 trades in there, quite decent sized trades, knowing, fully expecting the market was just going to tank, and so it did, and I got out here, and which in hindsight looks like, obviously I could have got lower, could even got out here, but I'd made the easy money, and I was happy to get out. Let's just have a look at this on a daily chart. The reason I picked the US dollar is because it was already weak. If you've watched my other videos, you'll know that I took the breakout of this breakout here. I didn't ride it all the way down. In hindsight, again, I should have, but again, like to make the easy money. But the reason I took this particular trade is that it's best to sell the weakest, not the strongest. So Australia has been the weakest currency for the last few weeks. When there's an opportunity to sell a currency against the US dollar, again, remember the whole reason I took this trade is because the US dollar is strengthening. I'm not looking at going the euro or the pound or even the New Zealand dollar, because of them all, the US dollar, the Australian dollar has been the weakest. So I'm interested in selling the weakest. So that's why I sold the Australian dollar. Okay, the other mistake that I made was coffee. Now, I took this as it broke down. In fact, I was a little bit more aggressive than that. I anticipated the break, so I took it at 57, actually 125.57. So I took it at the break of that candle there. Now, as you know, I'm a trend trader. Well, let's have a look at this. I should have taken it up here because this is a better break. But anyway, I didn't. I missed that break. So I took the next opportunity I thought was a good opportunity. It rallied up and it came down and broke down below here. Now what happened is that because I have to trade coffee as a futures contract, in and about this candle here, the futures contract, no, it was even higher because I'm still worse off than I would have been. Maybe it was this candle here. Somewhere in the middle of that candle there, the contract expired, and so I got a notification on my screen saying, you're out of the contract. One, I should have been aware of when the contract expired. That was foolish of me. But secondly, maybe because I was too busy or whatever, but I didn't get back in and re-establish that position, because I like coffee on the downside. Obviously it's made the break, still below the break. So here is roughly where I got stopped out, roughly down there. It's not quite so bad now, but 3 days later it was down here, and I was kicking myself. I should have simply re-established my short position. So, another mistake. The first one was very costly, sleeping through and getting the timing wrong. I don't know how many thousands of dollars that cost me, but a lot. And then this one as well. Now I'm going to look for it to, maybe I'll put an alarm while you're even watching. I'll just put an alarm on here. 123.43. Let's just go 123.40. I'm just going to say, look at possible resistance, and give it a bit of time. So if price comes up to here, I won't necessarily sell it again, but I will look to see if there's any turnaround in price. But really, even better, well, let's go down a bit lower, even better probably here, I'm more likely to look for resistance here. In fact, 124.86. Once again, just going to put it, let's go 124.80, just so that I'm so I'm going to be interested in those 2 points. The first one really is just the level that I got out at, so that wasn't really a resistance point. This looks like more of a resistance point. We've got one touch, an almost touch, and an almost touch there. Around that level is a price that it could come back up to, touch, and then fall away again. I don't know. I'm going to be analyzing that as it gets close to there to see if it does give some resistance and then fall down. If it does give some resistance and comes down again, then I will look at taking a short trade with a stop obviously above resistance. Okay, it's been a long video. I'm having fun trading the markets at the moment. I've been doing a lot of stuff, as I say, 87 trades in a month, and the month's not even over. That's a massive month for me. Obviously my broker's happy, but you know, even though I'm busy, I must be on to the fact that I've got to see the announcements at the right time. And you know, generally I've been very happy with my discipline. Other than that, I got in, I took the weakest, and I wasn't greedy, and I got out on the day that I expected things to turn around, and I was within a few hours I was right, so that was good. Okay, hope you enjoyed the video. Happy trading. Talk soon.